They say hindsight is 2020. Well, after the events of FTX, I think this couldn't be more true. So today we're going to do something different. We're going to travel back in time because I found a document from FTX or its sister company Alameda Research, and I want to read through that with you as if we're back in 2 years ago. So let's go. So what I have here is the Alameda Research pitch deck that they presented to investors a few years ago. I don't have a timestamp on this, but let's go into it. This is the Alameda pitch deck. So let's say we are a group of investors. Let's say we have billions of dollars, and this guy with fuzzy curly hair comes up to you and give you this pitch deck. So let's read this. In case you can see, let me zoom in a little bit. So Alameda Research is a quantitative cryptocurrency trading firm. We are the best crypto trading firm in the United States, among the most serious firms across the globe. We manage over $55 million and trade over $150 to $300 million a day across thousands of products. All major coins, shitcoins, and their derivatives, with an established presence in the United States, Japan, and the British Virgin Islands. We have a full-scale global operation with ability to trade on every market, on every exchange. Now this sounds a lot of BS to me. Like just reading that gives me a lot of BS meter, because if you're this big, how come we never heard of you, right? So this is a few years back. The Alameda Research. That's the trading firm by SBF. With our decades of experience from Jane Street, Optiver, Susquehanna, Facebook, and Google, we built the most sophisticated trading system in crypto world and quote tighter OTC spreads than anyone else. So they are saying that they have experiences from all these companies, the big companies. We know some of the engineers came from Google and Facebook, but SBS himself and the now CEO Alameda, they all came from Jane Street, a very secretive trading firm in New York, and they traded a ton there. So that's supposedly their credential. We consistently outperform financial firms operating in traditional markets and long-only crypto funds. Up until now, we maintain a low profile and are emerging to seek funding. We have capacity for hundreds of millions. So they're looking for hundreds of millions of dollars from the investors. So let's take a look at their performance. Supposedly, here's their performance. In bold, it says, high return in any regime. The crypto market's high volatility and myriad inefficiencies make it an exciting and dangerous space for trading firms. Alameda is proud to have the highest and most consistent return of any crypto firm that we know of. We are extremely confident we beat long-only strategies. Now, this is crazy. Let me move myself up a little bit. All right, so look at the data. This is the chart. The one in red is the profit P&L, which is the profit and loss ratio of Alameda. So as you can see, it's going straight up from 2018, from April to 2018 October, whereas the Ethereum price went down, right? Ethereum price went down a lot, but the Alameda profit kept going up. It's like a straight line, 45-degree angle. And then here's another Alameda profit and loss ratio compared to Bitcoin. So the Bitcoin price was zigzagging and then it went down, but Alameda profit kept going up. So they're trying to prove that they can still make money in a bear market when the coin's price go down. So if you look at the chart here, so Alameda is saying that they have returns of like about 7% in March, 8% in April, and so on. So they kept going up, right? And then annualized return to 110%, while Bitcoin and Ethereum went down. Ethereum went down 89, Bitcoin went down 49. So S&P 500 is about even. So they're saying they can totally beat the market, but this is given that there's only 7 months time in the sample size. So when you look at charts, always look at the numbers to make sure that these numbers are, you can always BS your numbers in order to sell a narrative. But here, if you look at it carefully, this is actually over 7 months period. It's a very small sample size. So when I see this, I wouldn't trust this, even though it looks extremely good, but I don't trust it because the sample size is way too small. Okay, let's go to the next page. Let me move myself down again. Okay. So, consistency. Crypto markets are ever changing, and only the best firms can show consistent results through all regimes. We are among them. We haven't had a losing streak in 6 months. Now, this is a famous quote by a lot of trading firms and a lot of companies before they go broke. Because when they do something like that, I had a long trading win as well, but it only takes one win to wipe out all your 6 months profit. One loss. It only takes one loss, one bad trade to lose all your 6 months of profit. So this doesn't mean anything to me. Our services. Okay, so what are they offering? We have over $50 million in assets under management and trade over $150 to $300 million a day. We provide liquidity on exchanges and services, OTC. So they have a lot of liquidity basically in their firm to be the counterparty of an OTC trade. So that's what they do. Now, what else do? They do algorithmic trading. We make hundreds and thousands of trades a day through an algorithmic machine learning driven automatic trading system. Now, I am a software engineer. When I see these buzzwords all coming together, you know what stands out to me? It says bullshit. When you see something like that. We capture inefficiencies across thousands of markets and tens of exchanges by deploying pure arbitrage and statistically motivated strategies. Now, this is just a fancy way of saying they do market making. They want to stay neutral for all trades, and they just want to take tiny couple cents for every trade and make thousands and thousands of trades. That's how they make money. And every time they do that, they deploy almost all of their capitals in order to gain the maximum number of return based on an arbitrage. So that's what SBS was famous for. That's how he started, is by doing arbitrage for the Asian Bitcoin tax, back then. But now he's moved it over to Alameda, and that's pretty much what they're doing. And here, actually, yeah, there it is. It's market making. We adopt a market neutral approach, quoting buys and sell prices for thousands of products and earning the difference where customers trade both sides. We make full use of our capital, deploying over 2/3 of it in open order at any given time. We avoid making directional bets and never have more than 10% of our AUM in unhedged positions. In maintaining low exposure to market moves and generating returns from imbalances supply and demand, we thrive in all environments. That's pretty much what market making is. It's not new. Our market making ability hasn't gone unnoticed by exchanges and stablecoins. We are engaging in market making partnership with several entities in which we receive fee rebates to provide liquidity. For some, we maintain spreads of 10-20 BPS wide, that's a point, and 99% uptime on partners' most important markets. So they're saying that they do market making so well that other exchanges and other services are actually using them to do the market making for them in exchange for small return. So they also do OTC trading. We are building our OTC business, providing quotes on all exchange-listed coins. This is all shitcoins as well. Our US-based competitor do vastly majority of volume in OTC. We don't yet. With our unmatched exchange trading, we provide tighter spreads and larger size than anyone else, and clients are noticing. We currently do 10 millions in OTC trade per week, and we'll scale up this dramatically as we find more business. Now, the time this thing is written, they only do 10 millions in OTC, but we know that over time, they actually do way bigger than this daily. They are one of the biggest OTC traders of all crypto. In fact, after this pitch deck, they actually grew to, they do 10% of all crypto volumes within any given day. That's a lot of volume. So they definitely scaled up after this pitch deck. All right, let's go over what are their advantages. Plain and simple, we have better trading, engineering, and operational talents than any other crypto trading firm. We have decades of experience from the best trading firms on Wall Street, including Jane Street and SIG, and the best technology companies in Silicon Valley, including Google and Facebook. You see, this is kind of deception, because when you have two people coming from Google and Facebook, that's not really saying you have a lot of talents from there. You only have like 1 or 2 people. Our experience and expertise let us outcompete rest where it matters. Generating idiosyncratic trading strategies with our approach, market neutral algorithm, execution strategies, and market making partnerships. Develop best-in-class technology with co-location and guarantee us the best data speed, sophisticated automated trading system, and reliable and stress tested risk management system. Oh, risk management system. Now that we know what happened to FTX and Alameda, this is totally false. Establishing our solid operational framework with robust banking, legal, accounting, and exchange partnership infrastructure. Ooh, another lie. Maintaining flexibility across market regimes by analyzing market trends and developing highly expressive trading system that can succeed in any environment. By trading system, they mean that SPF take all your money and 10x leverage to the tits and then lose all your money. We combine our strategy by trading, OTC providing, and market making and provide better services than each of our competitors. So what are they offering investors? So if you want to invest in a company, that's what they're offering. 50% annualized fixed rate loans, no lockup. So we accept both fiat and crypto and can pay interest denominated in either. We can take on either 200 million in capital and still achieve return on to beat traditional crypto market. So they pretty much guarantee a 15% return on your investment if you put your money in the company. For investors with specific risk profile, we are happy to discuss custom packages. For investment of 50 million or more, we are willing to discuss higher rates of return. Okay, now check out this line. This is the big one. Let me move myself again. This is a huge one, the last paragraph. High returns with no risk. Anytime you see something or someone promising you a high return with no risk, you should turn the other way and run. But that's what Alameda is pitching here. They say that these loans have no downside. We guarantee full payments on the principal and interest, enforceable under US law and established by all parties' legal counsel. We are extremely confident we will pay this amount. In the unlikely case where we lose more than 2% over a month, we will give all investors the opportunity to recall their funds and we will guarantee full repayments. Of course, you know that by now FTX went bankrupt and they don't have any money. And this is totally false here. So that's why, kids, when you see high return with no risk, run away. But you know what? A lot of these smart people, they look at this lineup, of people. Now you know all of these people. These guys should be all famous now because they are the people in the middle of this crazy drama with FTX going insolvent within 3 days. And these are the people behind it. And so they actually fooled a lot of people, including Sequoia Capital, one of the biggest VC firms in Silicon Valley. So it's not really, it's not just us who are vulnerable to these investment scams, but when you look at a company like that, who claims to do a lot of these good returns and then claims to have no risk, high returns, you should do your due diligence and run away. But unfortunately, companies like Sequoia, they still invested hundreds of millions of dollars on it, and in the aftermath of the collapse of the FTX, they wrote off hundreds of millions in losses. So that is what the deal is currently. So what do you guys think? Would you invest in Alameda and FTX, SPF, and all of these guys after reading this pitch deck? Let's say you are a pretty rich person and these guys come along and offer you 15% no risk on the investment. Would you do it? Let me know in the comments below. With that said, I hope to see you guys in the next video.